Money is sprinting for cover. Bonds are rallying across the globe. Investors reach for safety on renewed trade tensions and fresh worries about growth. Here's the quick take. When investors buy government bonds, prices rise and yields fall. That's what we're seeing now. US Treasuries? Yields down a few basis points. Europe's joining in. German bunds, UK gilts also sliding, signaling a classic flight to quality. Why the rush? Trade friction is back in the headlines. Markets hate uncertainty. Slower global growth becomes the default fear, so money exits riskier assets and parks in sovereign debt. Add to that rising bets that central banks, especially the Fed, will cut rates more aggressively. Lower policy rates make existing bonds more valuable, so demand climbs. But this rally isn't risk-free. First, rate path uncertainty. If inflation sticks and central banks don't cut as much as priced, bond gains can unwind fast. Second, credit market spreads could widen. Corporate bonds may lag or even sell off while government paper rallies. Third, inflation surprises. A hot print can torch fixed income enthusiasm in a heartbeat. And fourth, policy twists. Any sudden breakthrough stir awkward or mouse mansen soccer it allow like or dense sized or dense through burst and trade on dar awkward and trade or geopolitics can flip sentiment overnight. What to watch next? Incoming inflation data, jobs data, central bank speeches, auction demand for treasuries, auction demand for bunds, auction demand for gilts. Also, keep an eye on yield curves. If they re-steepen on cut bets, the story changes. Bottom line, this is a classic flight to safety move powered by growth jitters and rate cut hopes. It can run until the data or policy narrative says stop. Want fresh charts on yields and spreads from the last few days? Type charts, and I'll pull the latest moves. Subscribe if you want fast breakdowns like this, right when the tape turns.